If you receive Social Security, if you file taxes, if you have a spouse or a parent or a sibling who does, you need to hear this right now. Because the IRS and the Social Security Administration just dropped a combined update that is already affecting millions of Americans. And most people have absolutely no idea it's coming for them, not until they check their bank account and wonder what happened. So, stay with me for a few minutes because I'm going to break all of this down in plain English, no jargon, no confusion, just the real story and exactly what it means for you. Let's start at the beginning, because I think a lot of people miss the full picture when these announcements come out. They see a headline, they get worried, they close the tab, and they never actually find out what's going on. So let's do this properly. Every single year, both the IRS and the Social Security Administration make adjustments to their rules, their thresholds, their benefit amounts, and their tax brackets. These aren't random decisions. They're tied to something called the cost of living adjustment. You'll hear it called COLA, and it's basically the government's way of trying to make sure that what you're receiving and what you're paying keeps pace with inflation. Now here's what a lot of people don't realize. When both agencies update at the same time, the ripple effects go in every direction at once. Your benefits can go up, but your taxes can also go up. And if you're not paying attention, you might actually end up with less money in your pocket even after a raise. That's what we're talking about today. So let me walk you through this step by step. First, let's talk about Social Security, because that's where most people feel this most immediately. For 2026, Social Security recipients are seeing a COLA adjustment. Now, I want to be careful here, because the exact percentage matters, and I want you to understand how it's calculated. The Social Security Administration looks at something called the Consumer Price Index for urban wage earners and clerical workers. That's the CPIW. And they compare the third quarter of the current year to the third quarter of the previous year. Whatever that percentage change is, that becomes your COLA. It's not a guess, it's a formula. And for 2026, that adjustment is real, and it is hitting bank accounts right now. Here's the thing though, and stay with me because this part is really important. A COLA increase sounds great on paper, and for a lot of people, it genuinely is. If you're getting an extra $40, $50, $60 a month, that adds up. Over a year, that could be $600 or $700 more landing in your account. That matters. For someone on a fixed income, that's groceries. That's a utility bill. That's a prescription. So yes, the COLA is a real benefit to a lot of people, but here's where it gets complicated. When your Social Security benefit goes up, your income goes up, and when your income goes up, you can cross into a higher tax threshold, and suddenly, more of your Social Security benefit becomes taxable. Let me explain this in plain English, because most people don't even know that Social Security can be taxed. Here's what a lot of people don't realize. Social Security benefits are only tax-free if your combined income stays below a certain limit. Combined income, in the IRS's language, means your adjusted gross income plus any non-taxable interest plus half of your Social Security benefit. If that total number stays below $25,000 for a single filer, you're in the clear. None of your Social Security is taxed. But if it goes between $25,000 and $34,000, then up to 50% of your benefit becomes taxable. And if it goes above $34,000, up to 85% of your benefit can be taxed. Now, for married couples filing jointly, those thresholds are $32,000 and $44,000 respectively. Let's take a step back and think about what this means in real life. Say you're a retired widow living on Social Security and a small pension. Your total combined income last year was just under $34,000. You were fine, only 50% of your Social Security was taxable. But then your COLA kicks in and adds a little more to your benefit. Maybe you also earned a little bit of interest from your savings. And suddenly, without doing anything differently, your combined income tips just over that $34,000 threshold. Now 85% of your Social Security is taxable. You didn't get a big raise. You didn't win the lottery. You just crossed a line that hasn't been inflation adjusted since 1984. And that's the kicker. Those tax thresholds I just told you about, 25,000, 34,000, 32,000, 44,000, those numbers were set in 1984 and 1993 respectively. They have never been updated for inflation. So every single year, as benefits rise with COLA, more and more people get pushed into these taxation zones, not because they're suddenly wealthy, but because the rules never kept pace with reality. This is sometimes called bracket creep, or in the Social Security world, it's just the quiet tax that nobody warned you about. Now let's bring the IRS into this, because the IRS updates for 2026 are running alongside all of this. The IRS adjusts things like standard deductions, tax brackets, contribution limits for retirement accounts, and income thresholds. And for 2026, there are meaningful changes happening across the board. The standard deduction is going up. That's actually good news for most people, because a higher standard deduction means more of your income is protected before tax kicks in. For single filers, the standard deduction has increased. For married couples filing jointly, it's gone up as well. I'll explain the practical impact in a moment, but the headline is that for the average person who takes the standard deduction, and that's the vast majority of Americans, this is a small but real benefit. Now here's where the IRS update gets really interesting for those of you who are still working or who have a spouse who is. The income thresholds for each tax bracket have also been adjusted upward. This is another inflation adjustment, and what it means is that you can earn a little more before you get pushed into the next bracket. So if you got a modest raise this year, there's a chance you're not paying more in taxes than last year, even with the higher income. The bracket moved, so you moved with it. But, and this is a big but, these IRS bracket adjustments don't help you if your income jumped significantly. If you had a major life event, sold a property, took a large distribution from a retirement account, or inherited money, you could be in a very different situation this tax season than you expected. And if you're a retiree who took a larger than usual withdrawal from your IRA or 401k to deal with higher living costs, that withdrawal counts as income. It pushes your combined income higher, which can affect your Social Security taxation, which can affect how much Medicare you pay. It's all connected. Let me explain that Medicare piece because it surprises a lot of people. There's a surcharge on Medicare called IRMAA, the Income-Related Monthly Adjustment Amount. If your income from 2 years ago was above a certain threshold, you pay more for your Medicare Part B and Part D premiums. For 2026, Medicare is using your 2024 income to determine whether you owe IRMAA, and the thresholds for 2026 have been updated. So if you had a one-time income spike in 2024, a home sale, a big IRA withdrawal, anything like that, you could be paying significantly higher Medicare premiums right now and potentially not even know why. This is one of the most common surprises I hear about. Someone sells their house because they're downsizing in retirement. They make what feels like a smart financial decision, but that sale shows up as income. 2 years later, Medicare says you made too much money and starts charging you extra. For some people, that extra charge can be several $100s per month, and it lasts for a full year. Here's what a lot of people don't realize. You can appeal this. The IRS calls it a life-changing event appeal. If your income went up in 2024 because of something that isn't going to repeat, a one-time sale, a retirement, a divorce, you can file a form with Social Security, specifically the SSA 44 form, and ask them to use your current lower income instead. This is not widely advertised, but it is absolutely a real option, and it has helped a lot of people reduce that Medicare surcharge. Now, let's talk about what you should actually do with all of this information, because I don't want you to just walk away feeling stressed. I want you to walk away with a plan. First thing, check your Social Security benefit statement. You can do this online at ssa.gov by creating a My Social Security account if you haven't already. Your statement will show you exactly what your new benefit amount is after the COLA adjustment. It will also show your Medicare premium deduction if you're enrolled in Part B. Know your numbers. Second thing, figure out your combined income. Add up your adjusted gross income, any tax-exempt interest, and half of your annual Social Security benefit. If that number is creeping close to those thresholds I mentioned, $25,000, $34,000 for singles, $32,000, $44,000 for couples, you need to plan for potential taxation. A tax professional or even a free Vita tax assistance site can help you with this. Third thing, if you're still contributing to retirement accounts, check the updated limits for 2026. The IRS increased contribution limits for 401ks and IRAs, and if you're over 50, you're eligible for catch-up contributions too. Putting more into a traditional IRA or 401k can actually lower your adjusted gross income, which can keep you below those Social Security tax thresholds. This is a real strategy that a lot of people overlook. Fourth thing, if you had a life-changing event in 2024 and you're now paying higher Medicare premiums, look into that SSA 44 form. Download it, fill it out, and send it to your local Social Security office. It can make a real difference. Now, I need to spend just a minute on something important. And this is a warning, so please pay attention. Whenever there's a major update from the IRS or Social Security, scammers come out in full force. They know people are confused, they know people are worried, and they use that confusion to steal money and personal information. You need to know this. The IRS will never call you and demand immediate payment. Social Security will never text you and ask you to confirm your number. If you get a call, a text, or an email claiming to be from either agency and asking you to act immediately, to buy gift cards, to wire money, or to click a link, hang up. Delete it. Report it to the FTC at reportfraud.ftc.gov. Legitimate updates from the Social Security Administration come either through your My Social Security online account or through official mail with no QR codes, no urgency, no threats. If anyone is pressuring you, it is a scam. Please share this with any older family members or neighbors who might not know. The longer-term picture here is also worth thinking about because these updates don't happen in isolation. They're part of a decades-long trend where Social Security's financial challenges are increasingly real. The Social Security trust funds have long been projected to face shortfalls in the coming decades, and while Congress has options, raising the payroll tax cap, adjusting benefit formulas, changing retirement ages, none of those decisions have been made yet. What that means for you today is, don't assume anything about your future benefits. Plan as if your benefit might be somewhat different in 10 or 15 years. Build other income streams where you can. And stay informed because policy changes can happen. And when they do, you want to know early, not after it's already affecting your check. Here's my final thought on all of this. The system is complicated. The rules overlap. The thresholds are outdated. The timing of IRS changes and Social Security changes in the same year creates a kind of financial puzzle that most people were never taught to solve. And that's not your fault. But it is your responsibility to know what's happening with your own money. Because no one is going to show up at your door and explain all of this. You have to seek it out. And the fact that you're here right now, watching this, trying to understand, that already puts you ahead of most people. Don't leave money on the table. Check your Social Security statement. Know your combined income. Understand your Medicare premiums. If something changed in 2024 that shouldn't affect your future, appeal it. Protect yourself from scams. And please, share this video with someone who needs to hear it. A parent, a sibling, a neighbor, a friend who's about to retire. Because this information isn't always easy to find. And the people who need it most are often the ones who have no idea where to look. Stay informed, stay protected, and take care of your financial future. because you've earned it.